Hello friends, this is Raj Sastry from Raj Option Trading. Today I want to talk about my top 5G stocks. As you know, 5G is an emerging trend in the industry. My favorite stocks are really Inseego, NVIDIA, Marvell, AMD, Qorvo, AMAT, which is Applied Materials, Skyworks, Keysight Technologies, AVGO, and Texas Networks. We'll go into some of the numbers behind the selection of these stocks and go from there. So a quick profile of the company. So Inseego is a industry leader. They're into smart device to cloud solutions. Anytime you want to track maybe a vehicle or any of the mobile hotspot, so Inseego solution is used in all those industries, and the CEO has a 86% approval rate. And it's a small company, as you can see, 1.96 billion. It's a relatively small company. Next is Taiwan Semiconductor. Taiwan Semiconductor is one of the biggest business, and they basically help with all the semiconductor companies like Intel and NVIDIA and AMD. They're into nanotechnology, so this is the emerging trend again. And 96% approved the CEO here. And it's a big market cap company, as you can see. And next is NVIDIA. Yeah, NVIDIA is one of my favorite companies, and its CEO Jetson Wong, he's really transforming the whole industry. It's a bigger company, as you can see, $336 billion company, and they're also, they announced a plan to acquire ARM from SoftBank for 40 billion. So, combination of NVIDIA and ARM will turn this company into a super great company. Next is Marvell Technology. It's a $34 billion company, and it really helps with the all the analog mixed signal type integrated circuits. And they're buying Infi Technologies, which is again high flying stock, for about $40 billion, and 90% approved the CEO here. And third is Keysight Technologies. They're into electronic measurement, and it's a relatively smaller company, $28 billion company, and growing very well. 90% approved CEO here. Next is Broadcom. Broadcom is one of the steady eddies. It's doing great. It's got a great leader in Hawk Tan. And next is AMD. AMD has done really superb under the leadership of Dr. Lisa Su, and she's really giving a run for Intel for its money. So they have really grown their market cap and grabbed the market share from Intel, and they're also gaining the market share in the market, even from NVIDIA also. Next is Qorvo. They're into all sorts of mobile products, including Apple. It's a relatively smaller company, and 75% approve the CEO. And last but not least is Skyworks Solutions. It's one of my favorite stock. It has price has risen consistently in the past. It's about $28 billion company, and they're into all sorts of mobile type mobile devices, including Apple. So with that, let's quickly look at a list. So this is an eye chart. I will not go through everything. I will just explain the methodology why I selected these stocks. The first thing to look at is really the 1 year performance of these stocks. So it's really organized by this ascending descending order. The first one is Inseego. As you can see, 150 percentage performance over the last year, and it's in the order of descending order here. And main thing to watch here is really the revenue growth, as you can see here, and the gross margin. So combination of revenue growth and gross margin, as it exceeds above 40 or so, 40%, that's where it's a very good way to look at these growth companies. So the ones in the bold here are my favorite. I would be willing to buy these companies and keep them for longer. So with that, let's go into one or two companies that I want to just talk about today. All these are great investments, the ones in the bold especially. So with that, let's quickly look at monthly performance. The stocks in the bold are my favorites. As you can see, they've done consistently well. And if you look at NVIDIA as an example, steady Eddie doing very well. And same story with AMD. They've done very well. In July, they took over, 47%, as you can see here. So this is the eye chart. I will let you read this. Will not go through in detail. And next, we'll go into just a quick profile of three companies to look at, how we can look at these companies and what are the key metrics I look for. First, I want to look at a company which is really in a cutting edge industry. In this case, 5G is a cutting edge technology. And I will also look at the recurring revenue. In this case, Inseego is branching out from a pure hardware play into a recurring revenue play, especially with the SaaS applications. And they're into 3G, 4G, 5G, and their solution is used by first responders, telematics, and even monitoring and surveillance, and even diagnostics and repairs. It's used everywhere widely. And stock price over the last 3 years has risen by 842%. And stock price being at $20, it's only going to increase going forward. And they have achieved free cash flow, increased their subscriber base. This is one key metrics I look for. They're into SaaS now, so their SaaS revenue has risen by 65% quarter over the quarter, and 181% year to date, which is a very good metric to look for. And they're just beginning their SaaS journey. This will only accelerate. And some key competitors, as you can see here, TomTom, Netgear, Cisco, because they're in the same industry, into hotspots and some of these diagnostic type solutions. And what I really look for is really market cap. If you can see here, market cap over last couple quarters consistently increased 600, 599, relatively constant here. Then it has took off, as you can see here, all the way to 1.82. It's not growing astronomically, but still it's making a steady improvements in the market cap. That shows it's really grabbing the market share, and really, Wall Street is willing to pay money to this company. Next is the revenue. As you can see here, revenue has risen consistently over the last couple of quarters, and the revenue growth is highlighted here um, because it's shown green here because they have surprised the market with the positive revenue growth. That's why it's green here. And EPS perspective, they are still not making money. They are still investing in the company itself and the R&D. And last these two quarters here, 331 in March and December last year, they negatively surprised on the EPS side. The stock took a beating in those quarters. And gross margin, as you can see here, right now it's hovering around 27%. But the moment they accelerate the SaaS, this is going to take off. So that's a sweet spot. That's when stock is going to take off. And net margin is negative. They're still not making money. So I think as they accelerate more and more into software play from hardware play, this is going to improve. So overall, Inseego is a good company, relatively lower stock price and smaller market cap. It's good to buy. So next is NVIDIA. NVIDIA is really very ambitious company. They want to take market share from companies like Intel, even from AMD. So they're also, buying this company, called ARM Holdings from SoftBank, which is a good thing. And their stock price, if you can see, last 3 years it has risen by 131%, which is a huge feat for a company of this size. And they are doing great when it comes to the gaming. In the gaming sector, revenue has increased by 37%. Data center, it's one of their core business. Revenues up by 162%. automotive revenue up by 13%. So automotive, they are relatively, growing the revenue, off late, but they're doing very well there. And some of the key customers are really Amazon, Facebook, Tesla, Google. And some of these guys like Amazon, Tesla, they're also trying to, build their own solutions instead of, NVIDIA. That's one thing to look for. But with the innovation of NVIDIA, they can really make it. And we don't need to worry about competition as of now. And these are some of the key competitors: Broadcom, Xilinx. Xilinx is being bought by AMD. At least they are working to acquire Xilinx, and Intel, which is losing market share of late. So with that, what do I look for in a company that I want to invest in? So I look for improving market cap. So as you can see clearly, market cap has been improving over the last couple of quarters, and I look for revenue increase. As you can see here, the revenue growth from year-over-year revenue is pretty, well into 56 percentage, which is very good. I look for positive EPS, which is really positive, from a surprise perspective. They are surprising Wall Street with the positive EPS range. And gross margin, as you can see here, consistently gross margin is around 60, 65, 58 in that range, which is very good. I also look for net margin. As you can see here, net margin, they're making money, so they're doing well here. So with that, I would recommend NVIDIA to add to stock portfolio. And last but not least is Marvell Technologies. It's again one of the leaders in 5G, and they're also trying to acquire a hot company called Infi for about $40 billion. And a 3-year chart of Marvell, as you can see, they have done about 125%, which is very good. And market cap, as you can see here, consistently has grown from 15 billion all the way to 34 billion in about 4 quarters or so, which is very impressive. And from a revenue perspective, they have been increasing the revenue. Last quarter, when they reported back in December, they negatively surprised Wall Street with the estimates. So that's why stock got a ding around December 3rd. Year over year revenue, as you can see here, there is a revenue growth in double digits, which is good. And gross margin is about 40 to 50%, which is again good. And they are losing money right now, so the net margin is negative. It's understandable for a growing company, which they're in the still investing and growing mode, so which is okay. So with that, these three are the highlights that I would recommend. But overall, if you look at the stocks that are in the highlighted in bold, I would recommend buying these stocks. You could also do long call options, or you could buy call spreads. And if you're a little bit not so aggressive, you can also buy put spread. I mean, sell put spread below the stock price, or even buy puts or sell puts actually. So with that, it's a wrap. Happy trading. Thank you.